Friday and welcome. My name is Jessica Scott and I'm responsible for communications here at East Capital Group. And today we are welcome Anders Borg, who is our senior advisor. Anders, you're here often on Fridays. We have discussions, deep dives with our investment team and looking both at the week that's passed and also moving ahead. And there were a lot of numbers that came this week, and we would love to get your thoughts on that. So if we start with Wednesday, we had somewhat higher than expected inflation numbers in the US, and very interesting to hear your thoughts on that, and also with the Fed meeting coming next week.
So, I mean, US inflation wasn't fantastic, but it wasn't that bad either. Inflation is clearly coming down in the US. We've also seen that the labor market has remained resilient. So there is a bit of positive news in terms of US women coming back to work after COVID, and the wage increases are decelerating. So I think Fed is in a fairly comfortable position ahead of the meeting next week, and I think they can leave rates on hold because they basically see that US have come a far part of the journey toward back to the inflation target.
Yeah. And yesterday we had the ECB. They raised rates with 25 points, so up to a level of 4%. What are your thoughts on that?
Yeah, I mean, the ECB are in a position where they want to have monetary policy restrictive, and what they are saying is that that's where they are. So this might be the last or the one before the last rate hike, and inflation in Europe will come down when the gas prices fall out in October, November. A little bit more worrying was that ECB reduced the forecast for next year to 1%. So we're going to have 2 years in Europe with fairly lackluster growth.
Mm. Yeah. And global markets, they're extremely sensitive. We have a lot of news coming out of China. What would be good news? What would be bad news? When can we see the volatility level coming down?
So PBOC, the Chinese central bank, cut the rates today with 25 basis points. I think that was a good decision. China is seeing a bit of a slowdown due to the crisis in the real estate market. Yeah. So they need to support the domestic economy a bit. The Chinese exchange rate has come down, so Chinese industry is fairly competitive at these levels. So when we see the numbers, industrial production is growing about 4% and consumption is growing about 4%. So fairly decent outlook for a growth between 4.5% and 5% this year and next.
Oh, great. Thank you very much for the updates.
Thank you very much.